Bloomberg Audio Studios. Podcasts, radio, news.
Katie, you
Yes.
drank a foam head of Jamie Dimon last week.
Can I tell you something?
Yes.
I'm actually going back to JP Morgan's pub tonight.
You're a regular?
Someone
Got a stool with your name on it at JP Morgan's pub?
I was supposed to meet a specific person in a group and they weren't able to come. So now we're going back tonight.
So tell me more about the JP Morgan pub.
It was awesome. It was very normal.
It's called Morgan's, right?
It's called Morgan's. Yeah. I had an elevated shepherd's pie. Like they have pub food. Like it's a menu of pub food, but elevated. They have a burger, for example. The person I was dining with had a burger that looked delicious. Okay. Maybe I'll get it tonight.
Wait, now I want to come.
Invite Matt and I to the pub, someone from JP Morgan.
Wait. Okay. So first of all, I think I was joking about the foam head of Jamie Dimon. Like I thought you were anticipating that the latte art and the Guinness would include Jamie Dimon's face, but it didn't.
So there's definitely latte art. I believe the two options that were offered to the person I was with who did drink a Guinness were a latte art of the building itself or the M for Morgan's. And the drink came out with the M for Morgan's. But maybe tonight I'll see latte art of the building itself because I think that sounds really cool. It's a beautiful building. I've said that so many times.
Okay, but so you didn't get a Guinness, which first of all,
no,
you should get a Guinness. And second, when you order a Guinness tonight,
yeah,
Jamie Dimon face.
I'm going to ask for it.
All right. Wait, you say it was very normal?
Well,
for a pub or for like a lobby?
Well, it was beautiful because it's on the 13th floor, so the viewers are awesome. But
that's cool.
Like it felt like a standalone thing. It didn't feel like I'm at a bar in an office building. If that makes sense.
Okay, it's probably a standalone thing. Standalone like Irish pub or standalone like
elevated Irish pub,
like kind of a restaurant.
Yeah.
All right, now I want to go.
But they had they had televisions with sports on, that sort of thing. I wonder what sports will be playing tonight. I love watching it distantly.
I really want to go to Morgan's as my regular sports bar.
Hopefully someone will invite us and
I don't want to be invited. I just want to
You have to be invited.
I know. That's the problem.
Yeah.
You can't just drop in, have a beer.
No.
On the 13th floor, the JP Morgan offices.
But I go on Thursdays now. So if someone wants to invite us for next Thursday, I'm free. So is Matt.
Yeah, let's do it. Hello, and welcome to the Money Stuff Podcast, your weekly podcast where we talk about stuff related to money. I'm Matt Levine, and I write the Money Stuff column for Bloomberg Opinion.
And I'm Katie Greifeld, a reporter for Bloomberg News and an anchor for Bloomberg Television.
Our script says, what are we talking about today, Katie?
Oh, man. Do you want to start with stars or gold?
Stars.
It's more than stars at this point. We were going to talk about SpaceX.
Yeah, SpaceX is doing an IPO possibly on June 9th.
Yeah.
To prepare for that IPO, Reuters reported just before we recorded this podcast that they are going to merge with XAI.
They're in merger
talks.
Why not? Which is just one man talking to himself, I think.
No, it's
it's more than that.
It's not one man talking to himself, but probably XAI and SpaceX each have some very tired lawyers who Elon Musk is like, let's merge them. They have some discussions about
just smush them together.
Questions like at what valuation and
a gazillion,
right? So I have no idea. I haven't even read the story, but there is at least some sense that there are merger talks between SpaceX and XAI, which I remember not that long ago when people were like, Tesla should merge with XAI.
Well, Tesla, we learned...
Which just did an investment. But they actually both, SpaceX and Tesla both committed to invest in XAI, right?
Yeah, I believe so. I know for sure that Tesla, on their earnings day, which was this Wednesday, said that it would invest $2 billion in XAI. After
a shareholder proposal that got sort of tepid-ish support, they were like, yeah, let's do it. It's all the same stuff. It's all AI.
It's the convergence of the Muskverse, which is fun. I also love this because I forgot until today that XAI merged with X.
Yeah.
So SpaceX, in a sense, is merging
the successor
with
company to Twitter, right?
Yeah.
Right. Elon Musk might be re-IPOing Twitter. To be fair, and this is not the right way to do the math.
No.
But if he bought Twitter for, let's say, $44 billion and will soon re-IPO it at a $1.5 trillion valuation, raising $50 billion in the largest IPO ever.
It's incredible.
It'll be like, okay, you win, buddy. You win.
You're right all along. Man.
He took Twitter private at $44 billion. And I was like, that's too high. He's taking it public again at $1.5 trillion.
It is.
That's not really what's happening here, but
it is really
great.
Beautiful. I'm trying to find the rationale as lined out in the Reuters story. It has to do with building data centers in space.
Yeah, data centers in space. That's definitely the synergies are clear.
Yeah.
XAI
it's obvious.
Needs data centers in space, and SpaceX has space in its name. Yeah, all right, well,
there was an interesting note. According to Reuters, some XAI executives could be given the option to receive cash instead of SpaceX stock as part of the deal, which I thought was interesting. If you work at XAI, would you rather take cash or take SpaceX shares if you had the option to?
Yeah, I mean, this is the thing that people talk about with the Musk empire, right? There's been like expanding and contracting, right? Like Tesla did acquire the solar company a while back, and then X and XAI merged. So like sometimes the Musk companies combine and sometimes there are new Musk companies. And in general, it's like a good idea to motivate people to work on stuff by giving them stock in the stuff they work on, right? That's one reason to have different companies, right? The AI people get paid in AI stock, and the car people get paid in Tesla stock, and the rocket people get paid in SpaceX stock. And if you mush them all together, then like people have, less direct impact on their own compensation. And so there's maybe less motivation. So maybe if you're an XAI AI researcher, you're like, I don't know anything about rockets. I don't get paid for like rocket launches.
This is surely the top.
I want to, well, you might think that, but you might just think like, I want to get paid cash for my AI contributions and not have to worry about rockets.
Yeah.
So the FT reported that they're aiming to go in June because on June 8th and 9th, Venus and Jupiter will have some sort of conjunction, and that would be cool.
That would be cool.
Now, June 9th also is 6-9, which I'm sorry.
I didn't.
We got a big eye roll there, but
well, I did. I can't believe I didn't put that together until you
I know,
said it.
right? It's like one of these things where it's like, yeah, the planets are lining up, but like really, we're going on 6-9.
It's horrible.
It's horrible. There's no evidence that they're going on 6. I mean, it's just like that's Elon Musk probably chuckled about it. Anyway, I will say, I wrote about this, and I was like, it's interesting that the position of the stars is motivating Elon Musk's decisions. Although, as I talk about it, I'm increasingly convinced that the number 6-9 is motivating his decisions. I use the word astrology.
Yeah.
And someone emailed me to be like, Elon Musk is interested in astronomy, but that's not astrology. And it's interesting because it's not like signs of the zodiac. Or whatever. Astronomy is the science of like looking at where the stars are and the planets. And astrology is the superstitious belief that like human activities are influenced by, and like you should, make decisions based on the positions of the stars and the planets. And I feel like it's fair for me to say astrology here.
I mean, on this podcast, I'm declaring you correct.
I think it's not quite superstition. It's more like jokey fake superstition.
I mean, I would posit that the position of the stars influences all of our behaviors, and we just don't know
you
it.
would. Yeah, right.
Yes.
Of course, right.
But
I don't think Elon Musk would if you put him to it.
Yeah.
I think that he probably doesn't really think that, but he will act like he thinks it for the joke,
We've talked about this before, how I would love to sit someone down and just have an honest conversation with them.
About astrology.
Well, I would like to know, like, are you truly interested in that?
In what?
In like,
space.
Do you really think?
I feel like he's interested in
like,
space.
is it about 6-9 or is it about the alignment of the planets? I want to believe that.
I don't think he cares. Like, I don't think he thinks that like the alignment of the planets is auspicious and will therefore get him a better IPO price. I think he's like, ooh, planets, cool.
Yeah.
I don't know.
Well, he's right there.
Yeah.
They are cool.
Mean, right. It is kind of a motivating factor for building a space rocket company.
I also said to you earlier today that we're entering the year of the horse.
Oh, yes, that's right. Sorry. Now we'll talk about your astrological interest.
Thank you. I'm super psyched.
Is it strictly because you like horses and the year of the horse seems like something you'd like, or like is there more astrological information?
More to it. I mean, so I very glancingly know about the year of the horse.
Okay.
I don't
more
want
than about the other years.
More than the other years?
Yeah.
Well,
like you're not just like a general connoisseur of like.
No. I mean, it's served to me all over social media that this is going to be the year of the horse for obvious reasons. Apparently, the year of the horse is going to be a lot better than the year that we just exited.
Wow, that's good news.
Which, personally, I had a terrible year of the whatever.
Things are looking up for me.
We just went through. But the year of the horse in general is all about putting that behind you and excelling. At least that is my understanding looking at social media. I'm not an expert. I'm sure someone out there listening right now is steeped in this.
I assume it's good to spend more time with horses, but maybe that's not true.
I mean, listen, I got some horses you can hang out with. Specifically Matt. No one.
Not the listeners.
Not the general audience.
Right.
Let's talk about gold. I loved this story. Tether apparently is buying just tons and tons of gold.
Yeah, literal.
And I love this because Tether isn't trying to become a bank. It's trying to become a central bank.
I know, it's so weird.
It's so cool.
Tether is crazy because like the very basic business of like taking, $100 billion, almost $200 billion of investor cash, parking it in T-bills, clipping the coupons of the T-bills, doing nothing else, and like being insanely rich with like the simplest business model in the world is so good.
Yes.
And they're like, no, let's make it more complicated.
Yeah.
So like they have reserves backing Tethers, right? And I was looking at the reserves today. They have $174 billion of like US dollar Tether liabilities outstanding. They have like a $7 billion equity cushion. So like their reserves are like $7 billion more than their liabilities. And they have 7% of their reserves, so more than their equity cushion, in precious metals. So like instead of just buying treasury bills, just keeping your dollars backed by dollars, they're like, let's have some more dollars backed by gold.
Yeah.
Which is like, in some ways, a crazy thing to do because like you don't need to take any basis risk. You can just put it in dollars and live a nice life. But in other ways, it's like, yeah, it's like a traditional central banks back some of their liabilities with gold. Yeah, it's like fine. So I sort of understand why they do it. They also, by the way, some of their liabilities are backed by Bitcoin, which is also insane. But it's just like they've like transcended regular finance and become a central bank. And they're like, yeah, we have some big stash of gold in a vault in Switzerland.
I'm so into it. A nuclear bunker in Switzerland. That was in the lead. So obviously I was already going to love this story. Right. They are the largest known holder of gold outside of banks and nation states. Bloomberg interviewed the CEO and he said he predicted that Washington's geopolitical rivals would launch a gold-backed alternative to the dollar, which I also love.
One thing that they're doing here is they're backing liabilities with assets. I'm like, yeah, the assets, you don't need to diversify the assets, but like perhaps you want to for some reason. But another thing they're doing is they're like skating where the puck is going. And they're like, eventually gold will be the future of currency. Amazing. And so we'd better hold gold, which like, okay, whatever. I mean, look.
Time is a flat circle.
To be fair to them.
Yeah.
They have been better at predicting the future of currency than, for example, I have been. So, if they think it's going to be gold, you should listen to them, not me.
Maybe we should, not be smiling so much. Just to put into context how much gold they're buying, they bought over 70 tons of gold over the course of last year for their reserves. All told, they own around 140 tons of gold, which is a lot. And it's interesting that they stepped up their buying and gold has been going insane.
Yeah.
Central banks and ETF investors are collectively buying more than 1,500 tons of the metal, but still, you introduced...
Like a new central bank.
Yes, exactly. Buying gold, sort of price insensitive. So it's definitely a catalyst behind the rally.
Yeah, it's great.
It's so great. I just want to say that the CEO also said, so the former nuclear bunker in Switzerland, it's guarded by multiple layers of thick steel doors. He described it as a James Bond kind of place. It's crazy.
I want to
go there.
Well, I want there to be a Tether gold heist story because they're a central bank. They're the largest whatever holder of gold. But like, they have ties to the Mighty Ducks. Like they're like a somewhat comical organization.
Yeah.
And for like Tether to have a nuclear bunker filled with 140 tons of gold, like that's really good.
Yeah.
Like the person who robs that will not be like...
It's like at the base of some mountain.
Yeah.
I want to go.
It's going to be like a Rob Schneider movie.
Yeah.
Like it's going to be really good.
Someone's writing the screenplay. It's cool that they're in Switzerland. I cover ETFs, as you know. And a lot of the gold ETFs, including State Street's GLD, which is the biggest one, they have their vaults underneath London.
Yeah.
And that's also a place you can't go.
No.
But I love thinking about where
the
gold is physically stored. It just delights me.
Why?
I don't know. It's just so...
The Swiss Mountain is...
I don't know if I've told this story on the podcast before, but I was talking to someone at State Street about the vault at the time when like GLD was seeing crazy inflows. And I was like, is the vault getting crowded? And they said, no, gold is really small. It just weighs a lot. And I was like, oh yeah, for sure. And then had to quickly move on.
Right. I like the idea of like, welcome to our enormous pile of gold. And you open the door to like a cavernous echoing vault. And like in the corner, there's just like a little pile. And it's like,
I was expecting
140 tons.
Yeah. Like I was expecting like Harry Potter at Gringotts where they open the door and it's just like piles and piles of gold. And
maybe it is for Tether.
Yeah, maybe. I mean, it sounds like they're on a mission to get there.
Right. Like I feel like they would give you like a goblin powered car ride to see their gold.
Yeah.
Like
that's
as part of their transparency / comedy, like they would do that.
I think that's why I find it so charming because that's exactly what I'm picturing.
Right.
Just the ride from Harry Potter.
The Fed is not going to give you
no
like fun.
It would be very sober.
Right. When Tether takes you on a tour of their gold vault, there'll be like some loops on the track, right? It's going to be like, it's going to be a little exciting.
Maybe a smoke machine.
Yeah.
Also interesting. So Tether doesn't just want to buy gold. It also wants to trade it. And this is interesting. I didn't realize this, but so HSBC, it lost 2 senior gold traders.
To Tether, sure.
To Tether.
Right,
they hired them.
Right.
So they have big ambitions here.
Right. I think constantly like, if I ran Tether, I would have so few ambitions because like it just gives you billions of dollars a quarter for free.
Yeah.
I'm like, oh, here's your billions of dollars. And then you're like, wait, this is only tangentially relevant. But you know, Brad Jacobs, the CEO of various logistics companies like QXO, I think. They have the X's on them.
Yep.
I think we've talked about him on this podcast.
Probably.
One of his amazing things is that he wrote a book called How to Make a Few $1 billion, which is a perfect book title.
He's out with a sequel.
He's out with a sequel. The sequel, which I just found on my desk, is titled How to Make a Few More $1 billion, which I love the conceit that you bought his previous book. Mm-hmm. You read his previous book. You took the advice to heart. You put it into practice. It worked. You made a few $1 billion. And here you are with a few $1 billion thinking, I would like a few more $1 billion, but I don't know how to make that.
Yeah.
And then Brad Jacobs comes along with another book and it's like how to make a few more $1 billion. And you're like, oh, okay. That's how I'll make a few more. Like the people who made a few $1 billion are not really reading this book to make a few more $1 billion, but it's such a lovely conceit. Anyway, Tether are the people who are like, how do I make a few more $1 billion?
Yeah. Yeah, they want to trade it and compete with the actual banks. And just a little bit more on the physicality of gold. I love it so much. The company is exploring how to make its process of buying gold more efficient because according to the CEO, buying 1 to 2 tons per week is a very sizable amount.
Yeah, that seems right.
And you never think about it, you know, because I
never think about how much it would cost in transaction costs for me to buy a ton of gold every week.
And then transport it to your bunker in Switzerland.
Yeah,
what a charming story.
So when companies run into debt trouble, they do what people call liability management exercises or LMEs, where they try to reduce their debt. Often the way that works is like they go out to some creditors and try to pick them off. They like try to play one set of creditors against another. There are deals to be done where one set of creditors gets good new collateral at the expense of other sets of creditors. People sometimes use the term lender on lender violence or creditor on creditor violence. And so what happened at this company called Optimum or Altice USA is that all of the creditors signed an agreement saying they wouldn't do that. They would all work together. They would only do a deal with the company if 2/3 of them voted to agree to the deal. And Altice or Optimum didn't like this. And they sued the creditors saying, you're not allowed to do that. That's an antitrust violation. You're all agreeing to basically fix prices. You're all agreeing that you won't trade your debt with us at anything less than like the price you all agree on. Mm-hmm. Which like, I don't know. I've never been an antitrust expert. I find that like sort of intuitive, but also like I'm very sympathetic with the creditors because when companies run into trouble, like the creditors should kind of get together to divvy things up. But anyways, I don't know what's going to happen with the case. But it was brought by Optimum's law firm, a litigation boutique called Kellogg Hansen. But like their main lawyer was Kirkland & Ellis, the giant law firm that does a lot of restructuring work and a lot of private equity M&A work.
Yeah.
And what happened next is that Kirkland has resigned from representing Optimum in its debt work. And the impression that everyone has, and there have been some Financial Times articles about this, the impression is that Kirkland may have been sort of behind this lawsuit. Kirkland had been suggesting the theory that it's not okay for creditors to all get together and sign a cooperation agreement. And the creditors really didn't like that. And they came to Kirkland and said something that might rhyme with, hey, if you're involved with this, we won't work with you anymore. And Kirkland, which gets a lot of business from the asset managers in the complaint, decided maybe we can't represent Optimum anymore. Which is like an interesting, like the alleged problem here is that like these creditors have too much market power and they all gang up together, and so Optimum can't refinance its debt. And then when Optimum also loses its lawyers, it's like, oh, maybe they did have a lot of market power.
Well, I was a little bit confused because, as you said, so the lawsuit was filed by this boutique firm. The creditors believe that Kirkland had been behind the lawsuit. Did Kirkland basically say that, yes, we were, if they resigned as legal counsel?
I don't think they said, yes, we were. Like they had
or not like directly say that.
They had said in public, like, creditors should be careful about forming these committees because there might be an antitrust risk. The prominent Kirkland restructuring partner had said that. And so whether or not they were like, ooh, we were secretly behind it, it's like they might have agreed with some of the legal theories. I don't know that they conceded that they were the people who pushed for the lawsuit to be brought. But in any case, like working with a company that sued all of the big private credit lenders for doing this is like maybe whether or not they were behind the lawsuit, like if they were pressured to quit the company, like that suggests that you're not allowed to work for companies that sue creditors like that.
Oof. Yeah, the FT was talking about this. They called this a gut check moment that Kirkland blinked when the masters of the universe threatened to take their vast business elsewhere. Everyone in high finance and big law has noticed.
I used to be at an investment bank and we had lawyers on our deals and like the companies had lawyers. And sometimes the company's lawyers were people who often represented us, right? Who often worked for banks and sometimes worked for companies. And if you're a company, that's good, right? Like it's good to have a law firm that knows the banks well because like it's, they're repeat players. They know a lot. They like know the banks. But it's also a little unnerving because if you're the lawyers who regularly work with the banks, you might not work that hard on behalf of the company at the expense of the banks because you'll be working for the banks again. And there's something like that here, right? Like if you're a company that runs into distress and like you hire a big law firm that regularly works with the biggest asset managers, like that's good. They have connections. They're like, they have clout, but it's also like, are they looking out for you or are they looking out for the asset managers who regularly hire them?
Yeah. I have to imagine that's a more urgent question for a lot of those companies now in the wake of this. The FT also points out that in December, they reported that many of the same private capital firms that were upset at Kirkland over the Optimum fireworks are also upset at JP Morgan for providing a $2 billion rescue loan that shifted some of the collateral out of reach of the existing Optimum creditors. I don't know how you pressure JP Morgan, though, in this situation.
Yeah, I think it's like kind of standard for banks to be involved in loans that credit funds find annoying. I can tell you the classic answer to how you get your revenge on the banks, which is when Citigroup wires you $900 million by accident, you keep the money.
Just keep it.
Which is it was the same thing. Like Citi worked on a financing that the creditors of that company did, that was Revlon, the creditors didn't like. And then Citi accidentally wired money to the creditors and they're like, well, we're going to keep that. But JP Morgan, that's a really probably more careful.
Yeah, that's a really special situation.
Yes, you don't really.
Seems unique to Citi in some ways.
Yes. Speaking of JP Morgan.
Oh, yeah.
They're supposed to work harder.
This. Yeah, brutal. I lost that in my copious notes. So why don't you tell me about it?
There's a Bloomberg news story, not like full of details, but basically JP Morgan senior leadership, quote, has told the firm's investment bankers that they need to work harder to close the gap with rivals, including Goldman Sachs, on mergers and acquisitions. The co-heads of Global Banking said that the group had underperformed in M&A in 2025 and that improvement was needed to start winning back market share. I assume that most bankers get some version of this speech most years, right? You can always work a little harder.
Seems pretty standard, yeah.
But I read this week. Every so often, you read stories about banks telling their bankers, actually, you need to work less hard and do fewer deals, right? So sometimes that is like compliance, right? Like when a Swiss bank gets in a lot of trouble for bringing in a lot of bad clients, they have a meeting being like, maybe bring in fewer clients.
Yeah.
But some of it is like, there's a lot of wasted work at banks. And every so often, like a bank will look around and be like, look, you're spinning your wheels doing a lot of unpaid work for small-time clients, hoping that one day they will give you a small mandate where you'll get a small fee. Don't do that. Like, spend more time focusing on clients who will actually give you a deal and pay you a big fee, and just spend less time spinning your wheels. And I always love reading those stories, but like in practice, when you're a banker and like you don't want to put all your eggs in one basket, right? And like if you're only trying to get the SpaceX IPO and you don't get it, then your year is ruined. But if you've also got 5 other irons in the fire where like some, small utility company will pay you $500,000 to do a credit deal, like that's something. Mm-hmm. And so often you do read stories just because they're counterintuitive about bankers being told not to work harder to chase more clients. But this is the more normal version. This is like, just do more deals.
Maybe the pendulum will swing in a couple of years.
It always swings. But but I think if you're losing market share, you got to be like, just work harder. I also love that there's no differentiated strategy. Mm-hmm. Like, how do you get more deals? Well, you work harder. Right?
Yeah.
Get on more planes, shake more hands.
Focus on this sector.
Kiss more babies. Just do it. Just do more talking to clients and then the deals will come, which is probably true.
How psyched do you think the Goldman M&A bankers were reading this story?
I'm sure they got to talk being like, you need to work harder to win more
that's true.
Like,
it's just,
there's no standing still. You just get yelled at to work harder. Yeah.
Keep feeding the beast.
Right. Maybe they think, oh no, JP Morgan is going to work harder.
Oh.
Maybe not.
I'd be pretty psyched.
It's like a 30-second moment of victory, and then you're like,
I got to pick back up the phone.
Yeah.
Sometimes that happens in journalism, You're told to write fewer stories, write better ones. That's only happened to me a few times.
Right. Do you ever have the experience of like, you learn that some competitor has been told to work harder to keep up with you? I feel like, no. I feel like that's not really
Yeah, that hasn't happened to me. It sounds like maybe it happened to you.
No, it happened to Goldman in this hypothetical.
Yeah.
No.
All right. Good stuff.
Goodbye. And that was the Money Stuff Podcast. I'm Matt Levine.
And I'm Katie Greifeld.
You can find my work by subscribing to the Money Stuff newsletter on Bloomberg.com.
And you can find me on Bloomberg TV every day on The Close between 3 and 5 p.m. Eastern.
We'd love to hear from you. You can send an email to moneypod@bloomberg.net. Ask us a question, and we might answer it on the air.
You can also subscribe to our show wherever you're listening right now and leave us a review. It helps more people find the show.
The Money Stuff Podcast is produced by Anna Mazarakis, Moses Andam, and Alexis Hott.
Our theme music was composed by Blake Maples.
Amy Keene is our executive producer. Thanks for listening to the Money Stuff Podcast. We'll be back next week with more stuff.